Namaskar. Today we are going to continue with the General Financial Rules 2017. Normally this is general principles relating to expenditure and payment of money. What are the general principles? Normally what is government, we are going to spend money from the public fund, which is nothing but Consolidated Fund of India or Contingency Fund of India or public account. This we have already discussed. What is consolidated fund, what is contingency fund, and what is public account. So the rule is no authority may incur any expenditure from consolidated fund, contingency fund or public fund unless the particular expenditure is sanctioned by the competent authority. It is approved by the competent. In every department you will have delegation. Normally delegation of financial power rules are separately available, which are released by Ministry of Finance, and every department is given some powers. With some, in some aspects it will be 100% full power. Some aspect they have to again go back to Finance Ministry or Cabinet and all those things. In the department also, in addition to the general delegation of financial power, every department will delegate down the line all the subordinate authorities powers within the power allotted to the or delegated to the particular department, so that each unit of the department functions in an easy manner. This is the idea. So every time you need not go to higher authorities for approval. So any expenditure, no authority, whether if somebody incurs expenditure, it is already approved by the competent authority. If the person himself is competent authority, yes, he can approve and then incur. Not only incurring expenditure, you get into some liability which involves expenditure or transfer of money for investment or whatever it is from the public funds, which is nothing but Consolidated Fund of India, Contingency Fund, anything from government fund. Simply you call it as a government money. Government money is public fund, which are divided into three parts: consolidated fund, contingency fund, and public. Public fund is GPF kind of thing. You take from public as a savings or whatever it is, they are all public. All revenues and other things are all coming under consolidated fund, which we already discussed. So without approval, you can't incur even single penny. So if something is spent, the fact of the matter is it is already approved. Otherwise the person cannot do. So if somebody who has power, who spends, so he approves and then spends. It is something like that. Now delegation of financial powers. As I told you now, the financial powers are delegated to all the departments, and most of the cases it will be full power. And certain cases they will give limit up to 20 crores, something like that. 5 crores, there are many rules. When we discuss about delegation of financial power, we will take up that point. So what I am trying to say is that every department the delegated things are nothing but each department authorities are considered to be subordinate authority. Then who is the final authority? President of India. The President of India is the authority for Government of India, and each department headed by secretary. Down the line, all the people from the secretary, everybody is subordinate authority. The ministers, the cabinet, they function on behalf of president. So they will exercise the powers of presidential thing to the extent it is delegated to the department as presidential power. And then there are certain things it will go to cabinet, everything, but everything, the government functions in the name of president. This is one of the important part. So now, whatever financial powers, whatever things which are not delegated, automatically goes to or is vested with the Ministry of Finance. If nothing is told, this is simple, the particular power is with the Ministry of Finance. All financial matters, anything which is not shown in the delegation, you take it, this we have to go to Ministry of Finance for approval. Now, not only that, now department prepares, normally major expenditure, there is EFC, Expenditure Finance Committee, each department will have. Public Investment Bureau, that is for investment and other things. and that will be like certain cases interdepartmental also, and committee on establishment expenditure, and also cabinet committee for economic affairs or cabinet. So you send some memorandum for their approval. Normally the proposal will be sent in terms of memorandum, OM, office memorandum. But before sending, the department has to take the concurrence of the financial advisor. This scheme of financial advisor. Normally financial advisor exercises the power of Ministry of Finance. We will discuss separately about the role of financial advisor. It is only to ensure checks and balance in government functioning. Though secretary has got final authority for every expenditure for the department, because secretary being the chief accounting officer also, for each expenditure there will be rule. That rule says everything has to be concurred by the financial advisor first, and for that matter the financial advisor will not report to the secretary. He will report something like, it is a dotted kind of reporting. He will report to the Ministry of Finance only. Any meeting they will have that, any budgetary control or any economy in the expenditure, everything they will discuss and guidelines will be issued. So the financial advisor's concurrence is essential before the ministry or department circulates any kind of draft to all the ministries involving expenditure, involving commitment on expenditure or anything. So the concerned financial advisor will go through the proposal and concur his part. So if any issue is there, he can refer to Ministry of Finance. That is something different. So these are all some of the basic aspects of principles related to expenditure and public money.